What is going on, everybody? This is Rich Strell here with Protection Florida, where we help people reach their retirement goals on time. Today, we are going to be talking about 2 signs that the stock market is ready for a correction. Number 1, a trend is broken. We've all heard the trend is your friend, right? We've all heard about Newton's first law of motion that says a trend or an object in motion stays in motion with the same speed and in the same direction unless acted upon by an unbalanced force. Well, guys and gals, we have an unbalanced force going on right now in the market. Let's take a look at this chart. I'll show you what I'm talking about. Here we're looking at a 6-month chart of the S&P 500. And so when you look at this performance, the green line is the actual performance history of the S&P 500, okay? The red line is my trend line that I've drawn on here. And as you can see, a trend in motion is likely to stay in motion. An object in motion is likely to stay in motion. You can see that there has been a clear trend, little bit of a hiccup maybe right here, but for the most part, a trend happened, and then boom, we broke through that trend line. Trend line is broken and it shifted to more of an upside in this particular case. When this happens, guys, it doesn't mean you get worried, it doesn't mean you freak out, it doesn't mean you sell everything, but it does mean you start paying closer attention, because when a trend line is broken, typically and historically, something's getting ready to change. So we immediately recovered from that, or not even recovered, it didn't really do anything. Gave us a little scare, or a little eye-opener, I guess I should say, not a scare. And then we had a trend line going again. And now we have another trend line broken. So we're pretty much in a place to say, let's see what happens. It does not mean that it's going to come down. It could do just like it did here. But what we're looking for is we have a lower low. See how this was a low, this was a high. All of a sudden we have a lower low. If it pulls back up and doesn't make it to this high and then comes back down and presents another low, you have a low here and a low here. So you have lower highs, 1, 2, and you'd have lower lows, 1, 2. When this starts to happen, or if this happens, you now have a new trend. You have a downward trend. And a trend in motion is likely to stay in motion. So if this happens, we got a different set of scenarios. But for the meantime, we just want to watch this over the next 30 days or so and see what happens. The second thing, which is going on right now in our market, is overextension. Now, overextension is a relative term, right? What it means to you, it might mean something different to me, and it might mean something different to your financial advisor. But let me show you a chart and show you what I'm looking at here and what I mean by overextended. So here we're looking at a 40-year history of the S&P 500. 40 years has gone into this. And look at the subtle changes. Some incline there, some decline, some incline there, a little bit of steep decline, some strong incline, and then now look lately. It came down, so you got a lot of volatility here because it came down, it started making some jagged turns, and now it's going up almost like a straight wall. Guys, if that's not overextended by anybody's definition, I don't know what is. Does that mean it can't continue to go on all the way up? Absolutely not. All we're trying to calculate or take a look at and make common sense of is what's likely and what's not likely. So, with all that said, is now the time to worry? Absolutely not. It is, however, the time to sit down and take a look at your investments and see if any of your rules are being broken. Right? That's the way, which by the way, if you don't have rules around your investments, lines in the sand that you set well in advance, not after the market starts to go down or not after it's, gushing real high, but in times of just normal flow, sit down and set some boundaries. Set some boundaries, work with your financial advisor, work with your spouse, sit down and say, okay, if this happens, we're going to make some adjustments. If this happens, we're going to make some further adjustments, and know what those boundaries are. It could be if you have a certain, percent of growth, and then all of a sudden you lose some of that back, the market goes up and down, you're going to put a fictitious line in the sand and make an agreement ahead of time to say, when that happens, I'm going to pull out. So if you don't have those rules in place and you're just kind of looking at this and being like, I'm not sure what to do, now might be a good time to sit down with your advisor and say, hey, I'm concerned about this. I'm not worried, but I'm concerned, and I want to be prudent about what's going on here, and I want to take a look at this. Now is the time, in my strong opinion, to get your money out of your old 401ks, 403bs, whatever type of account you have sitting at your past employer. It's going to be very difficult if the market starts going haywire for you to gather up those invoices from your various products and various accounts and try to make sense out of. You really want that all in one place where you can take a look at it. A big reason I would say that about your old accounts is nobody's watching them. Nobody's paying attention to them. If the market craps the bed tomorrow, I want you to do two things. Number one, keep investing. If the market falls completely off the deep end, all that means is everything's on sale. If you have at least 2 years before retirement, then go ahead and apply that advice. If you're in retirement or closer, jump right into recommendation number 2 and meet with your advisor. You see, meeting with your advisor before you start buying something or selling something, he or she actually keeps you from doing something silly, from acting out of emotion. He's going to have, or she's going to have, your best interest in mind. So before you buy something or sell something or do something with your investments that's different what you've been doing, if you're acting out of fear or emotion because of the current situation that we just talked about, don't do it. Give them a call. Go ahead and get on their calendar today. Hey guys, it's Rich Strell here with Protection Florida. Thank you so much for taking time to watch this video. I hope you guys are safe. There's a lot going on in the world. There's a lot of craziness. Don't worry about it. Just slow down, make good decisions, meet with your professional advisors, and everything's going to be okay. If you enjoyed this video, give it a thumbs up. Maybe consider sharing it with a friend. And please subscribe. We're doing this all the time. Those of you who've been following us to see we're putting out a lot of content that we're excited about. So we're hoping it's teaching you, it's providing you insight and making you stronger and helping you get that dream retirement on time. Take care, guys.